Welcome to our guide on building a diversified investment portfolio. Today, we'll explore how diversification can protect your investments and increase your potential for returns. Start by assessing your financial goals. It's crucial to align your investment strategy with both your short-term needs and long-term objectives. Next, understand the different asset classes available: stocks, bonds, real estate, and alternatives. Each plays a unique role in a portfolio's performance. Determining your risk tolerance is key. Assess how much risk you're willing to take to tailor your investment choices appropriately. Create a strategic asset allocation plan. Dividing your investments across different asset classes helps optimize diversification. Consider investing in index funds and ETFs. These low-cost options provide instant diversification and are suitable for various investment styles. Don't overlook geographic diversification. Investing in international markets can reduce regional economic risks and enhance overall portfolio stability. Rebalancing your portfolio regularly is vital. Periodic reviews ensure you maintain your desired asset allocation and adjust to market changes. Finally, stay informed. Continuous learning about market trends and investment strategies will help you make educated decisions. In conclusion, building a diversified investment portfolio involves careful planning and regular adjustments. By following these steps, you can secure a healthier financial future.